Hello, and welcome to another MCO market update on XRP. Yeah, we want to start with a look at the larger time frame for XRP. Here we're still holding above that critical $1.21 to $1.55 area. The $1.21 level ideally holds to keep the overall bullish assumption, which is highlighted here in yellow on the chart, alive. That means on the smaller time frame, on the shorter time frame, we could easily get another low and still keep the yellow scenario alive, during which the current pullback is a wave 4. And then we can get a wave 5 to the upside, but the wave 4 needs to complete first, for which we don't have evidence at this stage, but we take a look at the smaller time frame in a minute to understand how far off are we, How far off are we? So one more high seems likely in wave 5 or 5 there to around about $5, $5.65, or even $6.60. But again, condition is we're holding the $1.21 area. Very, very important. Now, the pullback remains corrective in nature, so it's a 3-wave move. And the problem is I don't have a 5-wave move up on the micro level. But again, we'll take a look at that. What happens if we break below $1.21? First of all, based on the orange alternative scenario, which is a reasonable alternative, the lower support will likely be tested between 88 cents and 61 cents. I would not trust this scenario, however, because it would be too deep to really be to be really reliable. And also the 1-2 setup as shown in orange, it doesn't really fit into the bigger picture. Context is key, but it is still a reasonable, plausible additional bullish option should the market break below $1.21. Just with the difference, I wouldn't trust it at all, right? So that means we have to be flexible and have to watch if the market can then generate a response to the lower support region. Looking at the smaller time frame for XRP, you can see that from the swing low that formed here on the 7th of April, the market formed a so-called 3-wave move up. I mean, it was supposed to do that. It did everything it needed to do. And we have an A, B, C structure, at least in the yellow scenario, and could now be selling off. That takes a break below $1.82, the 78.6 retracement, though, to confirm that further, that the yellow scenario is taking the lead. And should the market hold support between $1.82 and $2.02, then further direct upside in the blue scenario remains likely and actually preferred. Or let's say not necessarily preferred. I would need to see a bit of a reaction to that Fibonacci support zone to clearly prefer the blue scenario. Formally, I've still labeled the blue scenario as alternative. But the thing is, if the pullback really is clearly corrective, which at the moment it seems to be, then these probabilities and the difference between the blue count, which is directly bullish, and the yellow one, which allows for one more low, but still in a bullish scenario, well, probabilities will be very dynamic. It literally depends on what price action shows in this particular pullback here. So next support is located around $2.03, then $1.96, $1.90, and $1.82. So for now, as I said, that pullback is corrective. Any break above that last high, here at $2.13, that's the 16th of April high, could be an indication that the next leg up has started, potentially to $2.46. For now, though, the support zone here, it hasn't even been tested. Or it has on Wednesday, but without any clear buy reaction. So these are the two scenarios. So one is short-term bearish, yellow, one is short-term bullish, and the $1.82 level, which is the 78.6 retracement, tells us which one is currently clearly leading, or rather which one is still plausible, because if the price breaks below 182, blue isn't really plausible anymore. So I'll keep you updated about that. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.